Welcome back to the channel. In today's video, I'm taking you through a detailed breakdown of one of my recent trades on gold that earned me about around $3,800 in profit. I'll walk you step by step through the entire process, from the analysis I did before entering the market to the technical confirmation I used for my entry, how I manage the risks throughout the trade, and finally how I secure my profit. My goal is to break down this video not just to show you results, but to share the thoughts, process and strategy behind the trade so you can learn how to approach similar opportunities in your own trading journey. So let's dive straight into the charts and get started. Alright, so a quick one here. So this was the trade I took on gold, and we have this zone here. And this was let me say the before. Suddenly the market came to go into our direction, and we have this after a few days, right, of holding. So I actually held this trade for more than a day, right? And so this is the proof that I took this trade right from that point, right? Actually enter more position when I discovered some more confirmation that this trade is going to our direction. So I had to enter more position on this trade, and this was what we amounted to, what I actually amounted to $2,800 in profits. Alright, so let's go to the charts. Let me break down how I actually took this setup. Right. So I'll be talking about algo market structure in today's breakdown. So what algo market structure simply means, let's just do a practical aspect of algo market structure. So on algo market structure, we have this after the break, and we have this. Alright, so our basic market structure tells you that when you get a break, right, this high becomes your swing high, and this low becomes your swing low. Alright, so for the basic market structure, we have, let's see here, algo market structure, and we have basic market structure. So let me just put it down. Basic market structure. So we have our basic market structure here. Alright, so the difference between algo market structure and basic market structure, let's do this. So for a basic market structure, it's telling you that we have this high and this low, right? To look out for. So basic market structure tells you that the market is going to do something like this, right? Then creates another new high, right? But the algo market structure is telling us that no, the market is not going to do this, but instead it's going to take out the previous low, right? So here becomes liquidity for the algo market structure. Here becomes liquidity, and we'll see the zone as our swing high, right, and our swing low, right, and this will serve as liquidity. So this is what algo market structure is telling us, that here is our swing high. So we have our swing high, and here we have our swing low, our swing low. So this is for algo market structure, right? So algo market structure is telling us that we have our swing high to our swing low. So let me just put this text in the middle. Yeah. Alright, so we have this swing low. Alright, so the basic market structure tells us that this is our swing high to our swing low after we get a break, right? So after this break, we have our swing high to our swing low. But no, algo market structure is telling us that this low is going to be our liquidity zone, right? So we are not going to look for an entry here, right, to target the high, rather you look from here. So from here, we have this zone as our swing high to our swing low, right? So here it becomes our swing high to our swing low. So you see this point to be our liquidity zone, right? So we expect this low to be taken out, right? So here it serves as our liquidity. Okay, let me just type it, liquidity. Alright, so this becomes liquidity zone, right? And what you expect the market to do is that the market should come down, right? Take out the liquidity, right, taps into either a fair value gap or an order block, right, before going up again. So we expect this to happen in the market. We expect this to actually happen in the market. So this was the setup. This was the strategy I used on gold after I got a break, right? I marked out my swing high to my swing low using the algo market structure, right? So for the basic market structure, if I had entered here, I would have gotten the loss because this zone would have been taken out like this, and we got this, right? So when you see a scenario like this, you just know that the low will be taken out and we'll be getting something like this. So let's go to the chart and let me show you how I actually got this trade set up here. Alright, so I actually marked this out for the sake of this tutorial. Alright, so we have this, we have this is A, this is B, and we got this, right? So we have our swing high to our swing low, right? And we got a break here, and this is our liquidity zone. So what I did here was to mark out my order block. This is the last bearish candle, right? So this is actually my order block, the last bearish candle before the change or the break of structure to the upside, right? So this was the last bearish candle that I marked out, and boom, market came back, right, to that zone and bought off from that zone. So this was how I was able to make um some money, right? So this was how I was able to make this, right, this setup. This was how I was able to make some money from this setup, and we end up making about $3,000 on this account, right? So this actually will break down on this trade. So a very simple setup, not difficult, a very simple setup. And we expect this high to be taken out as well. Now, I actually took one position here, but discovered that the market did something exactly again. Now you can see what's happening here. We got this, right? We got a break, right? And we got, sorry guys, and we got this low as our liquidity. Now we expect this low to be protected now, right? You expect this low to be protected. So if you want to take a trade from here, I actually took more position from here. So that was why I was having more positions, right? I started one position first, and when price retraced back, I actually took more position from there, right? So you expect this low to be taken out. Here is our liquidity, right? Money. Let me just do this. Here is money, right? See, what do you want to look at from again? Just mark out here this zone, and you can see this imbalance here, fair value gap from here. Let me just mark it out for us. You can see this fair value gap. You can either enter from your fair value gap or you mark out your order block, right? This is the last candle before the break. And let's see what we got here. Alright. So you would have actually missed out on this trade if you are taking the last zone out of this trade. But instead, just mark out your fair value gap, right? Just mark out the fair value gap and you enter a long position from it. So this was what I did, right? I actually adjusted my stop loss, right? I entered from here with more positions, right? More positions, and actually target same targets, right? So I'm still expecting market to take down this high, then continue what you want to do, right? So, but for now, I'm out of the trade. I actually close the trade here. So I'm out of the trade. So this was how I was able to take this trade with the algo market structure, right? So I'll have to explain the algo market structure in another series of video, right? Types of algo market structure. I'll explain it and just turn on your notification bell or your notification button. So whenever I upload new video, you'll be able to access them or get notified. And also, comment below if you want me to talk about anything in forex, anything you don't understand, you want me to talk about it. Just tell me, sir, talk about this, and I'm going to talk about it. I'm going to break it down for us. So this was how I was able to catch this trade on Go using just this simple method, right? This simple method.